Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of dollar index. My name is Vic. Hope you enjoyed the price action on dollar last week. It was quite a show. The dollar was actually falling pretty hard for an entire week. As soon as the new month started, it just never stopped. And it kept on going down, and that showed its impact in other currency pairs such as Euro USD, GBP USD, and AUD USD as well. So all the USD pairs were moving up or down because the dollar was getting weaker. But one important thing to note here is that if dollar was getting cheaper, if the money is getting cheaper, then it should flow somewhere. Because not if let's say you have a lot of dollars with you, and if you know that it is getting cheaper, then you would like to invest it somewhere in some other asset classes. So like Bitcoin, maybe precious metals, indices, and other asset classes which I'm not even aware of. I'm not even expert in any of those asset classes. But my observation last week was that the dollar was falling down, but it wasn't going anywhere. It was not being thrown into indices. It was not being thrown into stock market because S&P 500 barely moved. US 30, which is Dow Jones, also barely moved. NASDAQ moved a little, but again not that much. So where was USD going? And if that is the case, then it's quite possible that the price action that we saw on dollar index last week could be a superficial, which basically means that they could be looking for some kind of base somewhere in dollar index where they will think, okay, dollar is cheap enough for us to buy now. And once they decide, when I say they, I'm talking about larger institutions, and when they decide, okay, dollar is cheap enough for us to buy, let's start buying them, then you will see a movement in the dollar, upwards movement in the dollar. But until then, you'll have to keep your patience, right, and manage your risk properly. Do your analysis, but because the downtrend is there and the strength is there in the downward move of the dollar, you need to be very, very careful. No matter what your bias is, make sure that you are doing proper analysis and managing your risk. Okay, you must know what you're trying to do. Okay, never rely on anyone. Never depend on any kind of analysis. Try to learn for yourself and manage the risk for yourself. Okay, so this is what we are looking at. Let me quickly revise what we have been talking about for a few months. Okay, so if you look at the dollar on monthly time frame, we have this W pattern, and what you will notice that around here we have 61.8 Fibonacci level. So if I just draw something like this, ignore this entire clutter here, but you will notice that if I draw something like this, you will notice that this is 61.8. market fell down, which is fine, and then market went back up to create a double top around 61.8. it fell down. Okay, so when the market is creating a double top, we know that the maximum it can go up to is this one. Okay, because if this valley is broken, then we are looking for dollar to come back down around 82 level or 83 level or so. Okay, given the based on the condition that it is able to pass through this 200 SMA, which is yellow in color here, and that is going to be near about 86.8. So that's the bearish scenario for it. But as I mentioned, that this is actually creating a W pattern, and that W pattern actually does not complete here. It actually completes somewhere around here, pretty much around 107 level. Okay, so but that can be long-term bullish scenario for dollar, long-term, and I'm not even sure whether that will happen at any point in time or not. Right now, as you can see, the market has created a double top, and it is falling down, and it is going towards the value of this double top. Okay, so that's what we have. Okay, obviously this valley will act as a huge structure to support this entire price movement, and now the price has come very close to that. So what do you expect? You expect a move upwards. It may or may not sustain for a long time, but I'm expecting it to go to near about 94 to 94, sorry, 90, near about 95 level or so. It can extend towards 96 as well. So somewhere around 95, I'm expecting it to do that. But it may not happen almost immediately. It may not happen next day, in few days or few weeks. It may take months. It has taken good few months to actually come down. It has taken 2 months to actually create this structure. 2 months to do this, right? So do not just like think that it will start happening almost immediately. Okay, so this is higher time frame picture. Right now what we see, that market is falling down and it is reaching towards the structure. And one of the things that I mentioned before, like if you have been following my analysis a few months ago, this is what I mentioned before. We had an inverse head and shoulders here. So this is the left shoulder, this is the head, and this is the right shoulder. Now technically speaking, this candle is actually violating that head and shoulders pattern, because now it is coming very much towards head. But it is so far, because it's in still formation, and if this candle actually reverses completely by end of this month, or becomes like even a doji kind of thing, we still have that head and shoulders possibility, inverse head and shoulders possibility. Okay, and a lot of traders also look at the invalidation of this in head and shoulders only when this candle actually violates the head. So we may have little tilted shoulder on this side. That is also a possibility. And if that is the case, what we need to do is on higher time frame, for a longer period of time, is that break through this 102, that kind of level, this particular level, to be able to reach that 107, 110 level. Okay, so I'm just giving you all the scenarios, bearish and bullish scenario on higher time frame. Okay, this is what the picture looks like. If I just focus on the current price action here, around here the market created an engulfing candle, and that's why this candle was supposed to be bullish, which we were able to take benefit of. We went long from here, from 92 level, and then we were able to take benefit on the second month as well. Now after this, I was expecting this candle to be bullish, because this is a kind of structure, a candlestick structure, which actually forms a bullish candle after these two. Okay, that obviously did not happen. Okay, but the main thing is that this candle never closed below the previous structure here. And right now the current candle, which is December candle, is looking like a strong one. Okay, but the main thing is that the month is not over yet. You see, this candle changed from bearish candle, completely bearish candle, into bullish candle in last few days. Okay, so that can happen here as well. So always think of both possibilities when you're analyzing the market. Always think, okay, I know my bias is like maybe bullish or bearish, but I need to trade what I see. So I need to try to foresee all the possibilities. And one of the possibilities that it can turn into completely bullish candle or doji or something like that. It can completely reverse the price and come back to a 91 area. And the reason behind that is because this candle never closed below the previous one. So structure wise, this is still in my rule book, it is still not broken. So right now this may be looking for a base. Okay, and we were talking about this in our group, that we had FCP zone. If you saw my previous analysis, this is the FCP zone that we had. Okay, the market has closed below this FCP zone, so which basically means that this one is not valid anymore. However, if the next week candle, because we are looking at month candle, right? If I go to the weekly candle, if the next week candle actually comes back up inside this FCP zone and closes somewhere around there, then we may actually take confirmation to go long on DXY. Okay, because then in that case FCP zone will become active again. If the next week starts to fall down again, then we are looking at the next FCP zone, which is near about 89.89 level, which I've been talking about in our group. So we had 90.59 level, which I mentioned in the group, and that's exactly where it actually started to take a little bit of upward move. It may or may not sustain, and because of the current candle, this is looking like a continuation pattern candle, but you never know in the market, right? It's not always going to work according to me, or it's not going to work according to candlestick patterns. So right now the plan is, if the market starts to move upwards, I will still be out of the market on DXY, but I'm monitoring Euro USD instead. I'm not trading DXY as per se. I'm actually monitoring other stuff. I've been long on GBP USD for quite some time, and that has been profiting from the decline in dollar here. So you do not have to trade DXY as such. You can just make use of that analysis and other currency pairs and other asset classes. If the market starts to move upwards here, I will stay away from DXY. But if I get a confirmation, then I will think of actually taking long position from here, and then I will try to ride up into these levels. Okay, now obviously these arrows which I formed are valid from this FCP zone. Okay, that is why I am expecting market to come back into this FCP zone to be able to show me a confirmation. If the market falls into this FCP zone, then my plan will be to wait for a confirmation to go into this FCP zone, take my profits off, then follow these arrows based on further confirmation. Okay, so we go step by step in our methodology. Okay, in FCP analysis we go step by step. So the first step was 90.59. if that holds and if it comes into FCP zone, I'll wait for a confirmation to go long, and these are going to be my profit targets based on the arrows. There are a few other levels which I'll mention in a second. If it falls into this FCP zone, I'll wait for a confirmation, I'll go long into this FCP zone, the upper one, and I'll take my profits, wait for secondary confirmation, then go long. Okay, this is what the plan is. This is what my personal plan is. Okay, so let me just quickly remove these fibs here, and you will notice that there is a good confluence of Fibonacci in there, and that's why we call it Fibonacci confluence pattern zone, because all of these Fibonacci's are confluencing there to create a specific pattern. Okay, there are few levels which I want to point out. Another one is very important level here, which is 90.267. That's also a very nice level. Actually, let me remove this. Yeah, so 90.267, that is also a good level. Then we have 90.959. okay, 90.959. so if I just 90.959, okay, that's an important level that we have. Actually, we already had 91.40, so let me just quickly clean that up. Okay, and then we have another level which is going to be, give me just 1 second. Okay, so after that we have 91.3, 91.380. that's also there. Okay, then we have another level which is going to be 91.997. okay, these are important levels because if the market starts to move, then these move either up or down. These levels are going to act as support and resistance for us, as to say, and around these levels we look for taking profits. If you, let's say for example, you are short, let's say you are short from this level here. Okay, your first profit target should be around here at this level, and let's say if you want to go long, then you should wait for a confirmation here. So at all of these levels you need to wait for a confirmation to either go short, take profits, or go long. Okay, so you can make use of them in both ways. That's how they work. Now currently this FCP zone is of actually lower priority because right now this is invalidated. So I'm going to actually change the color of it so that we know that this will become only activated if the market comes back and closes inside or outside this FCP zone again. So we are looking at this lower FCP zone as the new important one, but all of these levels are very, very important. Now in terms of the targets, what we are looking for is, because the market has moved a little bit and we have got a new structure here, what we need to do is give me just 1 second, let me clean this up a little bit. Okay, what we need to do is we need to draw a fib on it, and then we can see where the target is going to be. So this is going to be 94, and then we have something around here which is going to be a very nice FCP zone again. So that's what Yeah. Now again, I'm not saying that it is going to happen. Again, I'm not saying that it is going to happen immediately. It has taken good few months to come down, and it can take few months, like probably a couple of years as well to reach there, because we are looking at weekly time frame. Okay, so but all of these levels can be very, very important, and if you're looking for some kind of like position or swing trading, then you should be aware of these levels. They are very, very important. Okay, so hopefully this was helpful to you. If it was, then hit the like button, and in the comment section let me know what do you think about this analysis, and make sure that you subscribe and you share this video with other traders and trading communities. Okay, I'll see you in the next one. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.